Hey guys, Steve here with the strategy session for July 22nd, 2014. Just wanted to take a quick look at the markets. We went over this a little bit more in depth in the free trade idea, so I definitely suggest you get over there and check that out. We went over the S&P 500, the NASDAQ, and the Dow futures just to get an idea. But briefly, what we'll do is we'll run through those real quick. Really thought we were going to have the breakout we've been looking for in the S&P 500 today. As you know, we've been looking at this trend line coming through, really moving higher since about middle of April. Now consolidating. We had a little poke above today and a close below the previous resistance level, which was on the 3rd at this 1977 level. So like I said, I really thought we were going to have that breakout that we've been looking for. However, sideways action for a little bit longer actually probably wouldn't be too bad of an idea. The one thing I went over in the free trade idea was how the NASDAQ futures actually did break out today. Again, same from the middle of April, same trend line essentially, and our little sideways consolidation. This instead, though, pulled back to a trend line and is now breaking out. So if we were long NASDAQ futures, this would be our stop. This 386 or 3863, 3,863 level would be our stop, which would be a great trade if you look at it from this consolidation here, entering, coming in, and picking up about 300 points in a futures contract would probably be a good trade for your accounts. The Dow, same thing as the S&P, really moving sideways. Hasn't broken the trend line yet by time like the S&P has, but is still consolidating. So potentially the indexes are setting up very well to continue taking long trades. So real quick, let's go through our positions. The first one I want to touch on is Apple. They reported earnings today after the bell. Let's see if they're doing anything. Down slightly. So it closed at 94.72, trading around the 94.20 level. Nothing to write home about. No need to worry. Not saying that we don't open lower or higher tomorrow, but at this point, everything is intact. Trend line is intact. Coming back to consolidate. A move below 93.12 would be the first sign of trouble on this trade. And then obviously a failure at 90 would be our sign to exit the trade, and the trade has run its course. Archer Daniels Midland, we discussed this on the free trade idea, and the free trade idea, I am being a aggressive trader. I'm really moving my stop up to this 47.32 level. For us, our stop will remain down here at 45.22 until we can move it to this 45.94 level. Earnings coming up on August 5th. But the basic reason for adjusting this on the free trade was I wanted to show how you can be an aggressive style trader, or you can be a little bit more passive and really let the stocks work and give them plenty of room. Because the fact is, if we broke 47.32 and came back to this 45.50 area and continued then on another leg higher, there's nothing wrong with the trend, as you can see on the weekly chart, and you're still in a longer term uptrend. American Tower, this one continues to work for us. Great trade, great entry. We had a nice move since our entry down here at this, I guess we got in probably around 90.36. We're sitting at 92.88. Earnings coming up on about the 30th. For right now, though, our stop sits at 90.75-ish. So this one was one that we identified another, what we consider a small consolidation area right through here. We had the breakout, and now we're pushed again to new highs. So stop will, I think we adjusted this either yesterday or on the weekend update, but our stop now will sit right under there, and this trailing stop goes away. So again, that's fairly aggressive, but we come back and we break 90.85. we would break the trend line and then potentially could break the previous resistance area. Amazon, as I said, earlier, the Nasdaq is definitely outperforming both the Dow and the S&P, and I believe Amazon is in the Nasdaq, and which would be one of the reasons that we continue to have some strength out of Amazon. Earnings coming up on Thursday, but at this point, really not much to do. Potentially could move our stop to this 337 level, but I'd really like to see this actually move sideways and not get too far extended to the point where we don't have a consolidation area and a logical area to move our stop to. EQR continues moving higher, nothing to do. Fidelity continues moving higher, not really much to do. Our stop was raised to this 54.70. This became our initial stop, gets grayed out, and let's just show that so we don't get confused. So 54.70 is our stop in Fidelity. Honeywell, this one actually opened higher, closed lower today, which is could be a sign of exhaustion, especially on such a strong day that we had in the market. But the fact is, we had a good entry. We entered in here. Here was our breakout from earnings, and we entered the next morning. Oh. So we entered right in there. So yesterday was a good move. Today gave some back, not much. Mondelez really just moving sideways. We're starting to put in a little bit of a higher pricing, but as I said in the weekend update, and I believe yesterday, I would really like to see a retake of this 38.75 to get to really confirm that breakout. And Wyndham, if you were looking at it based on closing prices, today is actually an all-time closing high. Earnings coming up, let's see. Actually, it looks like Thursday. Right, we identified that yesterday. Amazon and Wyndham are Thursday earnings. A couple triggers that we had today. Aon really pushed higher right into that upper area of resistance. Earnings coming up, so no trade on that. IVZ, same thing, really pushed up in that to that 38.75 level. Earnings coming up on the 31st, which is next week, so no trade on that. Lockheed Martin, similar to Honeywell, it's another defense company. If you look at it a little bit more closely, this is actually the resistance here. We're going to just adjust this a little bit. So right through there, we could see a top, and again today. So we would really want to see a push above that. And then I would just be a little concerned to take the trade just due to the distance in our stop. We would actually be, if we got a breakout to the 170 area, well, our stop wouldn't be for $14, which is, a little high, but less than a 10% requirement that I have. Northrop Grumman starting to break out, so it's good to see these industrials breaking out. That bodes well for our Honeywell trade. This would be another one that we could take if we wanted, but I don't want to really be in two of the same types of stocks. But no matter what, the earnings are tomorrow. Prologis broke out this morning, closed lower. Looks like it had earnings today, so that could be the reason. Qualcomm, another tech company, moving well, really off the bottom of this channel here. And earnings, it looks like, are tomorrow morning or tomorrow after the close. So, maybe we would have a trigger for Thursday, but that's really it. And UMP, which is one of the setups that I wish I was in this myself. But, this one was identified, moved higher. Again, on the weekly chart, moved higher, consolidated, and now we're starting to get a break of the weekly and the daily. Unfortunately, earnings come up on the 24th. So, if we were undisciplined and we wouldn't follow our rules and we would enter before earnings and potentially could have a disastrous outcome. So we will follow our rules and continue to watch these stocks. For right now, guys, I think that's really it. I think there's really, not much to really say. Apache, again, earnings coming up. Qualcomm we went over. Expedia, still in the middle of the range. Let's see. Let's just go through these real quick. Computer Sciences looks like it has earnings coming up. So these are ones that didn't fire a trigger today, but I just wanted to go through them real quick to make sure I didn't miss anything. Southwest Air, again, that's a similar pattern to UMP. Great trade, one that we were in for the initial model portfolio, and most likely one that we would still be in, 5-6 months later. But earnings are coming up, looks like maybe tomorrow or the day after. Kenson, no. Pacific, we did. Corning, still in the middle of the range. Northrop Grumman, we did. Estee Lauder, middle of the range. Marathon Oil, pushing higher, but earnings coming up. Lincoln National, nothing. This could be the analysis as quick as this. As long as you have your plan set up, and that's why we spend so much time on the weekends. You could thumb through these in 10 minutes and say, nope. Doesn't have to be much more complicated than that. FedEx, no, middle of the range. Because we've drawn all the charts, so we don't need to sit there and draw every time. Kraft, middle of the range. Eaton, nothing. Baker Hughes, nothing. Exxon, earnings coming up. Nothing. MMC, nothing. UPS, nothing. So, like I said, guys, there's not much to do besides stay long what we are, and let's see if we can get a couple other triggers. But, like I said, markets are setting up well for a continued move higher until we get that move and until we get some other triggers. For right now, we're just managing existing positions. So don't feel that you have to do something every day. The fact is, doing nothing is usually what makes you the most money. So with that said, guys, if you like the video, please hit the like button below. Make sure you put some comments down there, that I can answer if anything was confusing or you need further clarification, and I'd be happy to do that. Make sure, obviously, you follow me on Twitter, StockTwits, and subscribe to the YouTube channel to make sure you get future updates as timely as possible. And with that said, thank you for watching, and we'll see you tomorrow.